Hello. It always seems to happen on Friday here on Finance Friday. Rob Morales, our State Network. I'm here with the Satoshi himself from Sacramento, Henry Satoshi. Hello, sir.
Yo.
So we come at you every Friday talking about money, finances, and how we can help you build your wealth and whatever. I mean, it's very topical. We kind of talk about whatever on this show, but mostly dealing about money. So I'm here with Satoshi again. We lost Frank along the way. It seemed like he had some power problems.
Power outage.
It happens to the best of us. You know, unfortunately, I've
Maybe
had
he'll be
this
back.
excuse come up a few times before. Yes, sir. What'd you say? I'm sorry.
I said maybe he'll be back. We'll see.
We are hoping the Dave Ramsey of Phoenix is sorely missed when he's not here. He gave himself that title, by the way, Dave Ramsey. But no, we're here talking about a few things, talking about money and stuff. And on Fridays, it's kind of like a calming thing before you go on the weekend. I like to reflect a little bit more on Fridays. I think as things wind down, you kind of you get through the week and. You hopefully have a little bit clearer perspective on things in life and also possibly about money too. And then as you go into the weekend, Sunday night, I'm looking at the charts and trying to figure out where the hell I'm going to put my money next week. And with this whole Russia thing, the whole Russia thing's kind of getting on me. Are you following the whole Ukraine debacle?
I started to watch it a little bit, but it's kind of, I don't know. It's like
I really don't know how to take it.
almost. What's that?
I really don't know how to take it. I really don't know how to respond to it.
Well, we mentioned it last week. We said, hey, in general, stock markets specifically don't like war. And so we said last week, okay, Russia might invade Ukraine. That can cause some volatility. But I think, do you remember when Russia invaded Crimea and it kind of caused some stock market volatility?
No. When was that?
Exactly. So in the long term,
it
doesn't really affect things very much.
Yeah.
But again, in the short term, you can get these dips, which we saw on Wednesday. We saw a big drop in the markets, which is kind of like if you're looking to buy stuff, I like to see those big drawdowns where everything like we talked before, like indiscriminate selling. Every sector is going down. We had a big flush on Wednesday. And then yesterday, I was feeling like, okay, I think there might be, if there's another big flush like that, then I'm going to start buying. And so that's kind of, you had to kind of get in. It was very quick. It was like early in the morning when the markets first opened up, and then just big reversal. So I think in general, I read somewhere that for the most part, like stock markets will drop whenever a war begins, but then it's just, I think the market doesn't like uncertainty. So if we're talking about like, oh, there's an invasion, a war could start next week, that's when things kind of get a little hairy. But then once the invasion starts and you see like, okay, maybe it's not, and I don't know what's going to happen, but maybe it's not as bad, or maybe it's not going to affect the economy as much as people think. And then,
and I think for the most part, people brace for impact. And that's metaphorical for like, I don't know what's going to happen next kind of thing. And so I better pull my money out of somewhere. Because I heard, I don't know if it was on the radio or something, like people are pulling out cash from their bank accounts. I don't know if that's a mass or just a nuance kind of like some one offer. I don't know if you've heard anything about like that this week.
Not really. I think, like, remember, the market is just always trying to anticipate. It's always trying to figure out what's going to happen next. So whenever there's a whisper, like, okay, the same thing with the rates, interest rates, and the Fed. The one thing you can count about with people is that they tend to be very fearful, and they also tend to be very greedy.
Yeah.
Right. So you can always count on that. So when you say like, okay, the Fed's going to raise rates. Oh, okay, they're going to take away the punch bowl. Then people just, oh, okay, raising rates. They're going to raise 3 times, 4 times, 5 times. There's going to raise 7 times next year. And then people just start taking their money out. They start freaking out. They want to get off risk assets. But you got to remember, like, so people that took their money out, normally, like in a volatile environment, you want to take your money out of risky things and put it in safe havens, which in the past has been like the bond market. It's in general been a traditional place to go. But you got to remember, the bond market is it's like, do you want to take your money out of something and put it into a bond paying 3% and inflation's at 7%? You're losing 4% a year, and it's more than that.
Well, I mean, it's better
Um,
than nothing. I mean, better than losing it, I guess, with inflation.
it's
I mean, you're
better
going to lose out
than
on inflation
losing it.
anyway, but I mean, just putting your parking it to where better than a savings account. But like, how do you go buy a bond? You know what I mean? I guess you can put your money in like
Well, you
something
can
like
buy, yeah, you
TLT,
can
but
buy bonds on the market just like you can stocks. But you
and
saw, I mean, it looked like at least yesterday, and then it carried on till today. People took
yeah,
their money out. It's like, okay, where can I put it? Bonds. And then you look for things that are on discount, things that have some value, and so you see a big. I think like technology and growth really took off. Yeah, starting yesterday and today. You saw at the beginning of the Russia war. In general, gold does well in times of war. So when the war was kind of like people were talking about this invasion, you saw kind of a spike in gold. I think you
I
talked
did see
about it
that.
last week. Where I
Yeah,
mean, but now
see where that's at.
I was hoping like that Bitcoin would kind of have this follow through, also like gold,
I
and
didn't.
we
Yeah, I
kind of
haven't
see
seen
that
that.
today.
Yeah.
Where well, Bitcoin is up. It was down from 35, so it's up. Let's see, the low was 34.3, so it's up about $4,000 the last. Maybe it was that since yesterday. I have to zoom in. Let's see.
So that's gold. That's at
And gold kind
18,
of went down a little bit. So
1890. Yeah, I cashed out on my Kinross. Oh no, my Barracks gold. It went up about 6%. I didn't want the volatility with those miners anymore, so I sold out that completely. I closed out
and,
that position because I was in a positive. It was negative forever, and so I wanted to reacquisition that somewhere else. But this is
and I can
Bitcoin
show
right
you
now.
my I can show you my levels on
All right, here
where
I'm
I see
sharing your
Bitcoin.
levels. These are your levels, buddy.
Yeah, so here
Give
we
me
go.
give
Now
me some
I learned how
levels.
to share my screen today. I'm
Oh
so
my God!
excited.
I will mention that we have gone back and forth a lot on trying to figure out this whole share screen thing. So let
It
me go
worked.
back. Let me go back there. So be prepared. There's some turmoil in the shared screen industry.
Yeah, so anyway, so this is so for me, I haven't really been buying as much Bitcoin lately. And just uh these are the lines. This is going all the way back, I believe, to the all-time high back in 2017. If you account for inflation, I think that this is like the new trend line here. This um
So where are we at on that line, by the way?
so here we're on the top line, and you look every time it kind of gets to this level here, it kind of bounces off. We did that before, it came down here, tested again, and then we did this here yesterday.
Were those off the
So right around
Fibonacci's? Where those
right around
lines?
35,000.
Where do those lines come from? The fibs?
Those are just no, those are just trend lines. Simple trend lines that I used all the way. You can go all the way back down to this, and then I just I clone them and move them up.
Hmm.
So anyway, if you wanted to get Bitcoin yesterday, anytime you get to this 35,000, so far it's holding up. Now, not to say that like okay, I don't want to say you should buy it at 35,000 and then in a couple
We're
months
not financial planner advisors. I don't at
yeah,
all.
I'm not giving advice, but because what if it comes down and goes, we can come down to the mid 20,000s. But here's the thing: is like you don't know when tops are very hard to get, and also bottoms are very hard to get.
So what is
And
that? A 6 month
so,
double bottom? What is that?
what is this a double bottom?
Yeah. So
I
you
don't
got
know. This is just a good for me. This is just a good. It shows that at this level, there's been support for that buyers want to come in and purchase. Okay, so these are always good entry points to get into. And like I was going to mention, I did send you the photo from Fidelity.
Oh, am I doing that now?
So you can show that if you want. Should I hit stop sharing?
No, I mean that just puts me back there. Is this
This is
your models?
yeah. So this is basically from Fidelity. So Fidelity, they have over $4.5 trillion of assets, and they came out with a report. I think I sent it to you a couple of weeks ago, but you can tweet it or
I
Google
don't
it or
read shit
whatever.
anyway.
Fidelity and Bitcoin,
Yes.
and
Yeah.
but this is where they see the trend going. They and Fidelity is a pretty large financial institution. Okay, so this is not me. This is what they're saying. They see Bitcoin going to 100,000 somewhere around 2023, and if it follows the adoption and growth of the telecom business, we could get to 1 million by somewhere around 2028. If it follows the growth of the internet, then it's something more like 2034.
Which is
So
12 years from now.
12 years from now, yeah.
So I mean that's I mean, as far as like from my standpoint, it's like, okay, so I have to anticipate that whatever money I'm going to invest in Bitcoin, or let's say I really do like it, and I do. I will say that I do like Bitcoin, but I really have to figure out, okay, so where I'm at in life now, and this goes for everybody, I guess, watching the shows. Where am I at now? I'm going to have to hodl, whatever amount of money. So if I have like 10 grand, and we get to $1 million in 12 years, I have to understand that let's say 10 grand is going to be just parked in a position for that length of time in the hopes that it'll get there, because there's no guarantees. I mean, we've seen that. There could be some sort of aggravator like this thing that's going over Ukraine. It could be like another virus. Not that I hope that, but it could be something that halts that growth. And so these are anticipations, and I believe I think there's a lot of hope. But I'm just like, I think everybody else, I want to park my money and then make some, and then obviously utilize it because, I guess what you're explaining is a long-term position, and,
right.
and you're more of a long-term Bitcoin guy rather than short-term.
Well, you have to be. If you look at it, on a short term, then you will drive yourself crazy because it'll be up, down, whatever. But yeah, I mean, so you're talking about investing money. Okay. So I'm not talking about like money that you need on a day-to-day basis. Okay. So I have some money, and this is just me personally. I have some money. You have to look at how much money do I need on a monthly basis to live. And that includes rent, that includes food, blah, blah, blah. Okay. And then you some people will say you need to have like 3 to 6 months of that in reserve. And then you're going to ask yourself, okay, once I have that, let's say I have more than that. Let's say I have a year's worth. What are you going to do with that cash? I mean, and that's what we're talking about. We're talking about finance. We're talking about putting your money somewhere that's going to grow. And so that could be buying, like you decide to buy real estate. Okay. Because I think real estate is going to be great. Now, why are you doing that? Are you doing that because next year you're going to sell it? You're doing it for the same reason. You're doing it as a long-term option. And this is what people tend to do is like, if I say you should buy Bitcoin because in 10 years it could be 1 million. And it's like, yeah, but in 10 years, that's a long time. But you got to think of it like, if by buying it now and holding it for 10 years, you're going to 26 times your money. And so that's not insignificant.
Well, but you also have to negotiate a little bit that you're parking it for a long period of time that you can't touch it, and then 2, the volatility in Bitcoin itself. Is it going to be regulated? Is there going to be something that prevents me from making that money? I mean, is there going to be so sanctioned and so regulated that you're not going to see those yields? And I think this past year was kind of a reflection of that, like where. This time last year, we thought there was going to be, a crash in the market, or at least a significant correction, and it just shot up towards the end of the year. But now we're seeing those corrections. You know what I mean? So it's really hard to negotiate like 10 years from now.
There's always going to be there's always going to be something. If they figure out regulation let's say this year they finally come out and say, okay, this is going to be the regulations on crypto, and then that'll be done. Then it'll be something else. If you were into it and Frank was into it and everybody was into it, then the price would be a lot higher.
Well, and I think with the thing that people need to negotiate and probably mention as we're here and as we're talking about it is there has to be money that you have to utilize today. There's got to be money that you utilize between today and 6 months, and there's money that's utilized 6 months and beyond. And each one of those has different frameworks of decision making. Each one of those has frameworks of like, how am I spending that money? Obviously, the stuff you need today, you're going to spend it on your daily stuff, your daily routine,
Right.
your lunches, your gas. And then you have your 6 months, which is like your rent, your mortgage payment, HOA payments, all those regular kind of like utility payments for your house. And then beyond that, past the 6 months, that amount of money that you set aside should be that growth money. Right, Henry? I mean, just kind of throwing out numbers for people so that people understand. Because if you're, the reason I mention that is because there's so many people out there that I connect with and talk to who are really on a day to day, that don't have any money to invest. They're like, oh, I want to invest, but I have to pay my rent payment next month. And you're like, okay, so well then
Right.
you really can't invest. I mean, it's really setting yourself in a position to either make more money, make more income, start a business where you're generating income, or looking for assets that generate income passively. And real estate is one of those. But right now, the real estate market's just shot as shit. I mean, to be fair and to be honest, people are being really competitive in buying. So it's really hard to acquire real estate. I mean, there's other opportunities for asset growth. NFTs are a new one. Art has been something that has. I've seen some like websites that you can you can buy like a piece of art, like a Van Gogh or something, and you can buy shares of that Van Gogh, and then when it's sold, you can kind of there's different opportunities to make money, but a lot of what you're making money wise has to be set 6 months or more into the future, and I don't see a whole lot of people, if you're not making significant money like that are in that mode or able to in that modality. I don't know if anybody's out there. Comment, maybe give some insight on what you're going through.
To talk about. But anyway, yeah, you got to decide what your risk tolerance is and how much money you have. And yeah, if you're, and it's very hard to give like generalized.
But I think people do need that. I mean, some people are just kind of living that, maybe just, I don't want to say ignorant, but just blindsided, maybe blindfolded by, the aspects of how they can grow that money versus always being caught in this kind of rat race and always spending the money and never having any money to invest or even save.
Well, it goes back to basics. Like, so if you go back to when we were living in Tucson together and
I remember that?
and I didn't have like a lot of money in the bank where I can just buy Bitcoin right now if we were there. But it starts, so it starts from the basics. And, either I'm the representative, so Frank is the representative for the financial advisor. If you have no idea what to do, you can always go to a financial advisor and ask for advice. But just remember, you're going to pay money to do that. Yeah. And then for me, I'm just the representative of somebody who is like, okay, I want to learn about it. I want to learn how to invest. I want to learn how to grow money, and I'm going to read about it and learn myself. And I'm just telling you, like, you have to start with the basics. If you're one of these people like you're talking about, and I don't know who's listening or whatever, but you have to figure out, how am I going to generate more money? And then the first thing you do is to pay yourself. Okay, so if you make, I don't know, $1,000 or $5,000 a month, you have to take a certain percentage and give it to, just like we've talked about this before. The government wants its share, so you got to give them. They're going to take it no matter what. That's not negotiable. And then you have to take a certain amount and you have to pay yourself. And that means save it before you go out and spend all the other things. And then you're going to say, well, what if somebody they're just getting by? Well, then you got to figure out a way to generate more money. Take a second job. I don't know. I mean, we've gone over the basics before. Once you have the money, then you got to decide, okay, what's my risk tolerance? Do I want to do real estate? Do I want to do an index fund? And then the most risky will be the individual stuff, right? And again, like, I'm just sharing my screen here because, like we talked about yesterday. So,
I guess let me go back to that. There you go, buddy.
Yeah. So last week it was insinuated. Well, yeah, if you bought Bitcoin here at I don't know what this was, 69,000, and now it's at 38,000, you lost half your money. So this is why you shouldn't buy Bitcoin. But if you just look at the long term, just go back 2 years. So if you've had this for 2 years, it basically you had a 400% return, even with this 40 or 50% drop down. So that's 440% return in 2 years. That is phenomenal. Compared to your S&P, which is the orange line here, you would have made 34%. So that is the why you go into riskier things, because you want that return.
Yeah,
But also with more risk comes more volatility. So
yeah.
again, you can't just look at it from, okay, I had it for a month and now it's down. It's supposed to go to 100. What happened?
Well,
Okay,
not
these
to
things.
and not to be the contrarian with Bitcoin, but you could see just on the lines like that. People want orange sustained, but people like volatility, which is Bitcoin, the up and down. Like, oh shit, I made 10,000. Oh, I don't want to lose it.
And you
But
can look at it.
I mean,
Look at any of these
that's
compared to
really
Tesla.
but again, that's really a dichotomy of like how people want to feel those two emotions. Like they like the roller coaster, they don't like when it's
Right.
down, but they like the stability of like the orange, which is, you said, the S&P, right?
Right. So if you like stability and you don't want, in down times, you don't want to feel stressed.
Yeah.
These are all the things that you have to kind of decide. Like, I want to be able to sleep at night. Okay. Well, then you can dollar cost average into this index, and you're going to make, over time, you're going to make this orange line. It will eventually go up. But the only reason that I do individual is because for me, I have a certain amount that I want to do. I want to try to get better returns. So I have to put it into riskier things, just knowing that over time, here, the 2-year return on Tesla, even though it was 1,200, now it's
Yeah.
800, is 10 times your money in 2 years. Okay.
So I guess
And
I guess you have to also understand your risk tolerance and kind of where you're at in life to. I mean, there's
right.
just, I guess there's so many factors to take into consideration when it comes to like a circumstance like what we're in today or what we're feeling today is where you're at in life. And I mean, obviously, if you're 20, then your risk tolerance is probably a lot higher than when
It should be a lot
now
higher.
in our
Yeah.
40s.
Just imagine. Okay, so we said, like, you're saying, oh, well, if I to get to $1 million in Bitcoin, I gotta wait 13 years. Well, what if you're only 25?
Yeah.
You know, if I was 25 and you had extra money, I mean, and those are the memes, like these young kids sleeping on an air mattress, putting all their money in Bitcoin. Maybe by the time they're 35 or 40, they can retire. Is
You
that
know
worth
what?
the risk?
Yeah, I was stupid. When we were living in Tucson, you mentioned it. I got my student loan payment, and I ended up paying off my credit card, my Best Buy credit card. And the first stupid thing I did was go buy that stupid home theater system for $400, and that was a lot of money back then. That was like it's like half my credit limit on that stupid card. It's crazy. The decisions we make then. And you make them in the moment. And you don't think about those things long term, so that's part of why I mentioned kind of those immediate references, like the money today, money 6 months from now, money 6 months and beyond, because I think sometimes people kind of need that. They need a little help. They don't know how to kind of differentiate, what money's what, and I think largely because they're not necessarily in position. I mean, if you have a wife, kids, home, there's so many factors and things you have to pay today that it's so hard to think about tomorrow. And we get so caught up in the moment. We get so caught up in survival. We don't necessarily think that. And we need to take that break. I think that's really the learning lesson that I have today is really separate that. And then the second part is educate yourself. That's kind of what I'm picking up, right? Is learn a little bit how this functions, how that works. And that's what I've been spending the greater part of the last year doing. I purchased some courses. I'm still learning. I know Henry and I, or Satoshi and I, have differences on what we should be doing as far as our money goes. He doesn't like the fact that I swing trade, or like that I'm looking for. I like knowing about that. Where Henry's more of kind of a long-term hodler, for the most part. And the volatility that he likes is in Bitcoin, because I think there's a greater return regarding that. But it's just like, well, how do I get there? I think is really the overall question. How do I get in a position to do that? And it's very easy, I think, to say, go get a second job or get another income. But people starting a business or doing stuff like that, I don't think they really know how to do, or establish that or position themselves to where they have a higher earning income. If you're making 100,000, you're really not making a whole lot. I know the median income in the United States is roughly 46,000 household income. Around 40, 50,000, which is crazy to me, and people talk about getting a 6-figure income, but that's really, in today's terms, that's really not enough to income. Honestly, I mean, you really have to have a couple incomes that are making 200,000 to really stay ahead of this curve right now.
I'm just
that too
trying to
much
keep
on
up
look?
with all your
Did I
stuff.
go off on a rant?
Yeah, you did. I'm like, okay, you keep.
I keep going in
Yeah.
different things. There's a lot on my
So
mind, buddy.
a lot of things.
Yeah.
Yeah. So if you're, of course, if you're living paycheck to paycheck, like you're saying, and you don't have a whole lot of money, then yeah, you probably shouldn't be. You shouldn't be doing individual stocks. It's probably too risky for you, especially if you're not doing the safer things. But I mean, like you're saying, sometimes it takes risk. Risk. Sometimes you get if you have a job and it's paying very little, and then it's like, well, do I just quit my job and start a whole new career? That's risky because
Yep.
it's scary and I don't know. But like for example, like for you when you had your previous job and then you went into real estate. I mean,
Yep.
that worked out for you. So that ended up giving you returns. But yeah, the thing is, like we've said before, if you're just
Yep.
living paycheck to paycheck, just making the bills, um, you're not. It's going to be hard for you to get ahead,
Yeah.
unfortunately,
And
because
and
of inflation and look at the things people, are. It makes it harder to get by. You have to have assets. Assets is
yep.
what's going to grow. So you buying that real estate property and then now able to get a little more income, that will allow you
Yep.
to eventually in the future have a little more money to start investing it into other things, which could be more real estate. It just all depends on your risk tolerance. Like, and for me, I'm always constantly like, hey, what can I do? Where can I put my money? Real estate, is it cheap?
Yeah.
It's not cheap yet.
Not yet.
Stocks, which stocks are cheap, are going to do long? Yeah, there's a lot of decisions, and it's very personalized for person to person.
Yeah, and what came to mind is Rich Dad Poor Dad. So that book is really the quintessential if you're going to start your business, if you want to start a business. It talks more about the emotions and the emotional process regarding that. And if I may, you and I are kind of Rich Dad Poor Dad, and not necessarily that one is making more money than the other. It's just we have a dichotomy of decisions. So, in that book, we had one dad that separated, got a formal education, and got in a position where he's making money one way.
I
And
believe it's
then,
a teacher, right?
what was that?
I think the one dad was a teacher. He
Yeah,
went to school, got educated, and became a teacher. And then the other dad was
started his business.
bought real estate.
Yeah, and started a business. And that's really, we kind of represent that dichotomy because we grew up in the same small town. And if anybody didn't realize or know that Satoshi is my brother, biologically, same mom, different dads maybe. Just kidding, same dad.
No,
I don't know. There's been some discussion there. No, but Satoshi got a formal education and he's positioned now where he's doing well. I digressed and went the opposite way. I still got my degree, probably in a social science, which really doesn't put me in a position to. Social work is where I started my career, and social work. I think I started at $33,000 a year. And that is not necessarily, that's not bringing in money. I mean, if you really realize it, it's like $10 an hour or something like that. Really ridiculous for what the work is. But we represent that dichotomy. One had more formal education where I started a business later on in my life. And, financially wise, I think we're in really good positions. But if there was a book to reference and to kind of take that emotional kind of framework and to ready yourself for this investment strategies and what you're doing, Rich Dad, Poor Dad is one of those things that I think and I would recommend anybody getting. But it is a challenge trying to figure out where we go. What decisions we make. With that said, I keep calling you Henry because that's your name. I like Satoshi. Is there? We're at the end of the show. By the way, it's been 30 minutes. Is there anything we've learned or want to share in the immediate sense? We tapped onto Bitcoin and the importance of possibly buying and holding Bitcoin. But is there anything that we should reference or talk about?
Well, just to follow up on what you were saying, yeah. So, if you look whenever the pandemic started, which was 2020,
Yeah.
the government printed 40% of all the dollars in existence. Okay, and so assets like your house, the stock market, all of those things went up 40%.
Yeah.
So if you're a holder of those things, your net worth went up by that much. If
Yeah.
you don't own those things and you're just working paycheck to paycheck, I'm pretty sure your salary did not increase 40% from 2 years
no,
ago.
no, I doubt it.
So that's where we get into that's unfortunately the people that own things get ahead. That's why you have this divergence of that's why they say the middle class is disappearing. People are getting further behind, and the people at the top are, their income is, or their value, their net worth is increasing.
Yeah.
Unfortunately. But anyway, so just in the short term, for this year, I think we're going to have continued volatility. And as far like I heard real estate mortgage rates were up 35%,
They're going up.
and applications are down 13%. So we could have a little bit of but I think as far as housing, it's still the demand is still increasing. So I don't see a big opportunity in real estate anytime soon.
Since you mentioned it, I think the only volatility in the housing market really is going to start in the rental arena. As people, as rental rates increase, people are going to be priced out. They're not going to be able to afford the rent. There's so many people that I help out and have helped out on the rent side that if this pace continues, because you have landlords out there wanting to increase, 300, 400, 500 a year, year over year. If that rate increases, you're going to have, I believe, and again, just believe that people aren't going to be able to pay their rent consistently or continually because the rental rate is going to outpace the amount that they're going to be making, unless you have 2 or 3 families moving into one house, like a San Francisco situation. People aren't going to be able to afford the rent, and that's where I think the volatility lies in the housing market right now. Is in the rental market, and then eventually it'll collapse there because then you'll have, I believe, if there is a collapse in renting, there will be a collapse in landlords who want to offload. I'm at the peak. I can't deal with this. I'm going to sell my house. I'm going to sell this investment and then go put it somewhere else. I believe if there is a crack, it's going to be in the rental market first. That's my belief.
Well, so that's real estate. If you have a 401k and you're dollar cost averaging, just keep going. Keep trying to, if you can max out the amount that you put in every year, that's great. And if you're in the position where you want to buy individual stuff, I think going forward, there's still a chance that the S&P can go down to 3,800. So. But just remember that going forward, the GDP, I think GDP in the United States is like $23 trillion, and the national debt is somewhere around 30. So the government owes a lot more money than they make a year. So for them to just go wild and increase interest rates this year, I don't see them doing that. Okay. And especially with if there's Russia, I mean, we could have, I don't know, maybe
there's always going to be something though.
Invade Taiwan. There's going to be something. Okay. There's always going to be uncertainty, and you just got to keep going, develop a plan, whatever that plan is for you. And if you don't know what to do, you can always get some help or read about it or learn about it, because that's the only way you're going to get ahead.
Yeah, Frank was here. He'd be able to kind of articulate that he's available because it is overwhelming. There's so much to learn and so much to understand when it comes to finance, especially your situation. And the challenge, I believe, really comes with fear, the fear of losing your own money. It's easy, I think, to give advice and direct people when it's their money. But when it becomes yours, there's that greater sense of fear and that greater anxiety in making those decisions. So I think the process is to recognize that. But we're at the end of the show, sir.
All right.
So I want to thank everybody for joining us here, all participants. We do like your comments and questions, so if you want to drop those in the comments section, even after the show, we appreciate that. Sacramento, Satoshi, thank you, sir. It's good and a pleasure to always have you here.
All right, Robert.
Thank you.
Talk to you later.
You're a good man. Goodbye.